Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. At present, the Australian dollar continues to loiter around the 71-cent handle after briefly posting a high this morning at 23. The overnight high was 28 before the market declined. Later today, we do have the non-farm payrolls release. The forecast for the non-farm employment change is expected at 175,000 although the previous month reading was at 20,000. So the market will be a little bit nervous into the number in case we get a bad release. The average hourly earnings month-on-month forecast was at 0.2%. Previous was at 0.4%, with the unemployment rate at remaining at 3.8%, with the forecast unchanged. At present, I still view towards a 71.50.65 as a supply zone. The market has actually maintained very well in these levels, but you can see with the many spikes that every time we go to test above the 60-day moving average or towards the 71.5 level, supply is increased. I do believe that the market still will challenge the recent rejection of this week of 70, 40, 50 area, and do anticipate that we could see a lower Australian dollar eventually towards the region of 69.40.60. Well, it would seem that the market took another challenge to the upside, but unfortunately we got slightly withheld to the rally due to the fact that the resistance came in well at 112.50. Although only minor, we could still see a break to the upside if the dollar does take a slight weaker stance with the non-farm payroll. So it all does rely on tonight's number. From a technical point though, I believe the market is attempting to try and recover, and therefore I still hold the view that we could get up towards around the 113 region, with the support holding at 111.60. Now, with that being said, if we do get a break of 111.60 to the downside, that does expose the region of 109.40.55, but this is unlikely at this stage. The dollar yen is once again pressuring the upside as it now just takes on the challenge towards that 111.60.70 area. It is assessed though that the bears will or most probably soon return. So I'm not getting bullish at the top side of this range and do expect to see a market turn back to the downside eventually towards the region of 110.75. The pound lost all its 3 days gains nearly overnight after tumbling from a high of 131.90. Currently trading around the high of 130. The fact is that the market's still a little bit uncertain whether we will get a hard Brexit. My view is still very much on the broader parameters of 129.5 to 133.5, and inside that there's just a lot of noise. Well, as you can see, we have a long-legged doji but close to a dragonfly doji after the market took a challenge to the downside and tried to take the level out of 112.80 but failed. From the rejection, if you have a look here on the 4 hours, it was a very strong rally, and from the rally of $14 may have put the market back on track to 1,300. It is assessed though that from the technical point, the market is still quite comfortably buying off that level of 1,282. While intact, I still hold the view towards the region of 13.00 to 1,320. Wrapping up with oil, the market retreated from the level of 63 overnight and posted a fresh low of 61.88. It is assessed that we probably have reached the topside target, given the fact from this inverse head and shoulders, the measured move was up to 63 to 4, with 64 being a stretch, but we have reached 63. And from the retreat at the moment, and also the declining RSI, could see a pullback towards the region of 61.5 or maybe $60 a barrel. Well, that wraps up for this week, but do take note that the NIG figures out tonight are very important, and if you're trading any US dollar asset, just be careful in case the number does come in lower. But that wraps up for this week. Thank you very much for joining me. I hope you enjoy the great start to the new day and the new weekend.